the Republicans passed on a party line vote in both the House and the Senate a massive tax cut, which I know you've described as a $6 trillion tax cut and $4.5 trillion worth of new taxes. Explain what that means. I mean, when you say that, like, what are the $6 trillion in cuts? What are the $4 trillion in new taxes?
Yeah, that was based on, the House and Senate bills. So the numbers might be a little bit different now. But what you have is a series of cuts on capital owners, inherited wealth, and corporations. So there's a corporate tax cut from 35% to 21%. That's the nominal rate. There was actually a report that came out yesterday that said the effective rate next year for corporations will be something like 9% on average. That's what they'll be paying in taxes.
So wait, what was the effective rate before this cut? I mean, so really their effective rate on average was like closer to 20%, and now it's down to 9%. Is that it? Okay.
Now that's about right. That's about right. So that alone costs something like $1.5 trillion. Then you add in the doubling of the exemption for the estate tax, which, is a tax on inherited wealth. So that's probably another $150 billion. You have this pass-through situation where businesses that don't call themselves corporations, which could be anything from the corner store to a hedge fund, they take their taxes, they pay their taxes in the individual rates. They're getting this 20% off the top deduction from their income. And so that is probably another $600 billion, $700 billion. You can add all this up, and there are others, obviously, and it comes to roughly $6 trillion in cuts. And that is partially financed by a series of tax increases. So they changed the rules on the state and local tax deduction and severely limited it, and that raises money. They changed the rules around the mortgage interest deduction so that it doesn't affect high income, high worth properties over $750,000. And, that's probably a good thing, but that's a tax increase. They changed the rules on inflation, how the brackets are indexed. And this is a very sly but meaningful tax increase on all Americans. It's a regressive tax increase, so it's hits the hardest on the lowest income Americans because the tax brackets will be going up at a slower rate, which means as you get a raise, you get pushed into a higher tax bracket faster. So that's another $150 billion, something like that. So, there are two ledgers here, one ledger of all the tax cuts and one ledger of all the tax increases, and that's kind of how that plays out.
All right. And so let me ask you, you had a piece in the Intercept this week before the tax cut was actually passed, suggesting that we already know in some respects that the corporate tax cuts are not working as advertised. And of course, I mean, this is, there's plenty of evidence in the past as to why this wouldn't be the case. But the evidence that we're talking about is literally in the past, like 3 weeks or month, right? I mean, walk us through that.
Yeah. So there's this sort of great debate. I don't know how great it is, but there's a debate between Republicans and Democrats over what companies are going to do with this newfound bounty from these tax breaks. Are they going to use that to create jobs and increase wages and increase investment in the economy? Or are they going to use it to leak money out to their shareholders and wealthy investors? Inevitably, those also are the executives of the company who are often paid in company stock. So which is it going to be? Well, in the 10 days after the Senate passed its version of the tax bill, and that is when it sort of became pretty well known that the tax some form of the tax bill was going to pass. In those 10 days, the amount of stock buybacks, and what that means is that the company uses its excess cash profits to buy back company stock. If there is less stock circulating in the market, then the price of the stock necessarily, in some respects, goes up. It's just the law of supply and demand. And everyone who's still holding the stock gets this artificial boost to the stock price and thus the value of their shares. That went up by there were about $70 billion in stock buybacks announced in just the 10 days after the Senate passed its tax bill, and that was just 29 companies. That only counts the companies who announced more than $100 million individually in stock buybacks. For context, in the entire second quarter of 2017, among all companies, there were 120 billion in stock buybacks announced. So that's, we're talking about a time period of 90 days as opposed to 10 days, and we're more than halfway there in just those 10 days. To break this down some more, the average amount of buybacks announced per day over the last 2 years was about $1 billion a day, and this was decelerating, actually. Once the tax bill passes the Senate, it's about $5 billion a day. So that's a five-fold increase immediately. And what this shows is that the money is just going to be leaked out to shareholders. That's the point of a stock buyback, and that's a way to convert this bounty, this windfall of tax cuts into real money for shareholders.
All right, and let me just add a couple of things to flesh this out. When Gary Cohn got up in front, this is maybe a month or two ago, he got up in front of a bunch of executives at some type of executive business forum, and somebody, a Wall Street Journal reporter, asked, looking on the sea of CEOs, who here is going to use their tax cut to reinvest in their business? This is the corporate tax. Nobody raised their hands. And Gary Cohn was everybody's hands, and they sort of laughed it off. But this is why, and we should say too that first off, stock buybacks was illegal 30 years ago before Reagan because
market manipulation.
It's totally market manipulation, but now it is legal. And we should also say that, we say shareholders, and you made this point, but I want to put even a sharper. I want to highlight this. Compensation for CEOs and for board of directors is so tied into stock prices, particularly because they get taxed at a much lower rate than wages, that if you've got a CEO and you have the opportunity to double, triple, quadruple your pay in a year, that has nothing to do with investing in your company. I mean, these people are running a cottage industry out of the C-suites, essentially, and that is the ones that are going to make me money.
Financial engineering. It's a way to loot the company of the profits that it creates and distribute them to the wealthiest shareholders in that company. And now you're going to see, like on Wednesday, AT&T announced, as a result of the tax bill, we're going to give a $1,000 bonus to all of our employees in the company. If you total that out, that's $200 million. There are 200,000 AT&T employees. The stock buybacks have been announced that were announced in 10 days is $70 billion with a B. So these PR schemes, which by the way show that there's enough money right now to give people raises, they've just been artificially held down to please Wall Street in terms of earnings per share, and the financial engineering schemes are going to be much greater and not touted in the popular press headlines the way that a few companies are going to maybe give a bonus here and there of a piddling amount of money.
David, let's take a break. And when we come back, I want to talk about other provisions in this tax bill. And I want to talk about that story about AT&T as a metaphor for the entire bill, in fact, We got to take a break. I'm Sam Seder. We'll be right back with David Dayen. We're talking about this Republican tax scam. I'm Sam Seder. This is Ring of Fire Radio.